Analyze and dissect the market further. We've got Kunal Bothra, Naresh Mirani and Deepak Shenoy joining in to do exactly that. Kunal, let me come to you first because while at an index level we may be down just about 200 points, but the internals are more scary right now, given the faction of the market which is in the red and the kind of quantum of fall that you're seeing, and the gainers are just about, barely latching on.
Yeah, Aisha, and I think that's been the nature of the markets over the last 2-3 months, where we've seen the whenever we've seen the index dropping down by say 0.5% to 1% range, we've seen the market breadth to be a lot more deteriorating. And today, I think today's day is also no exception to that. We are also seeing some rise in the India VIX. I think that could be a bit uncanny because we generally expect that after such kind of a last 1 week, 1.5 odd week, where the slow of events, once that is out, the India VIX ideally has to cool off and come back to that 13 or sub 13 mark. Now with this rise in India VIX, I would probably believe that this could be an indication that the volatility may just about start to increase for the indices. So far the comforting point for the markets is that we are holding on to the 20 DMA for the index, which is around under 23,250 odd mark on the spot levels. This is exactly that zone where just post the budget, the index bounced off, and from there we saw another 400 to 500 points rally. So we look at 23,250 as a critical support, and till the time the index trades above those levels, we can continue to hold on to long positions.
Right. Good afternoon, Naresh. Actually, if you look at the markets, the broader markets, no respite coming in for the broader markets, and in broader markets, a lot of names. Actually, we thought that given the fact that we had this sharp correction in the broader markets, some of the stocks would have actually got re-rated. The valuations would have looked attractive. Doesn't look like that, is it?
So for now, the broader markets have been hit today a lot more. We are seeing a 2.5%, 3% move for the downtick across the board. The small cap index has also taken a hit. And we are in this drifting zone where in every bounce back, we continue to face resistances on the broader markets. And this is a phase where we start making a bottoming out formation. We saw a decent bit of recovery on the Nifty, say from 22,800 to 23,600, 800 levels. In the same period, we saw a bounce back in the small cap indices also. Now we need to get into a consolidation phase where we start making a range. So for now, 23,000, 23,200 and 23,800 on the Nifty. Similarly, the recent lows should hold up on the small cap index. And post this consolidation, we get to know whether the next move is on the upside or we make a fresh breakdown with global markets.
Right. Deepak, hi, afternoon. How would you describe this market? Because, like I was chatting with Kunal earlier this morning, that all the indicators are pointing towards an upside, but that clearly seems to be eluding us. At least good news from the budget, good news from the Delhi state election verdict as well. Wonder what the markets are waiting for. And of course, a cut from the RBI too.
Yeah, I think all the fundamentally, even the earnings are not as bad as one would have put them. We were actually quite positively surprised. There were a lot of results that have come. If you look at some of the companies, and we own some of them, of course, M&M and so on, have been quite good in that respect. However, I think there is an overall sentiment at two levels. One is that the rupee has fallen quite considerably, and therefore impacts of it downstream may be more if it continues to remain at these levels. The second one is the fact that the US has started talking tariffs again, and that is a blow to world trade in a lot of ways. It's going to hurt the US a lot as well. We don't, I think, appreciate the enormity of it yet, because I think there's a lot of, jingoism going around about how this is actually beneficial X, Y, and Z, but it's beneficial to all countries in the long term, countries like India, which are anyway trying to be more self-sufficient. But in the short term, it's going to be a bit of it creates a lot of downside pressure, and downside pressure, there are lots of bankruptcies. So you don't want that in the short term, but of course you have to believe that the system gets better in the long term. However, as much as this happens, it's going to be another 2 or 3 weeks of this in terms of policy uncertainty. After that, the fundamentals will start having to play out. This is a great time for picking stocks, especially when they fall unreasonably, sometimes much more than their fundamentals indicate. That's the only time you get to buy stocks cheap. So I don't necessarily think this is a bad thing for people who have more than a few years to invest.
Right, Deepak. So, like the way you mentioned that it's time to pick stocks that have fallen more than warranted, fundamentals are strong. Any stocks or maybe sectors that you can point out these stocks from?
So I mean, I'll give you an example. We own LIC, and LIC had a pretty good result in terms of profits, 11,000 crores in profit after tax, one of their highest ever. If you don't consider the Q4, Q4 is unusually large because of the way they allocate profits from participating policies. But in Q1, Q2, Q3s, this is one of the largest profit numbers since they have been listed. They're listing at a P that's they're probably at a P that is less than 10 1 year forward. Reasonable growth in terms of profits also because they will take more profit share from policyholder profits. Essentially, they were half of what other insurance companies would be taking at 5% of profits. They're slowly increasing it to 10% of profits, which is what HDFC Life and all of the other companies generally take. So, just that is going to provide some layer. And then the fact that ULIPs are now back into some kind of they were disadvantaged a few years back from a tax perspective. Now they're not so much. So there is that is coming back as well. I think these are factors that, a relatively less than 10 PE stock, you're seeing that also getting hammered. I think that is, one sign. But apart from that, you look at the manufacturing industry in general, a lot of stocks have been down about 30-40%. Even in the auto sector, auto ancillary sector, we're seeing some stocks down tremendously, although they're showing some growth. There are some relatively overvalued sectors growing strongly and still down, like semiconductors and so on. So these are areas where we're looking at.
Interesting. So, Deepak, I just want to get back to LIC. So, what do you do then? Just book out, exit on a loss?
Well, if you want more money right now, sure, because that's the way the market is going to be. If you need the money now, and this is the only stock you have invested in, then you might want to do that. But typically, you would have a portfolio. You want to eliminate, if you need money, also you want to eliminate stocks that are relatively more expensive for what they are. But I would say keep in mind in a longer time frame, the solvency ratios of this company are at 2.07. The requirement is 1.5. Essentially, they have a lot more money sitting on as on their balance sheet than they should, and they should therefore start announcing dividends on this as they collect more and more money as it goes forward. So if you have a long-term horizon, 3-4 years plus, then yes, I think this stock is definitely worth it. We're biased because we own the stock, but then I would say that's the way to go forward. I would say sell only if you find better opportunities or if you need the money right now. But I would say this is an important part of our portfolio. I don't see any reason to sell it at a loss right now. But everybody's situation is different, so I don't want to give generic advice to anybody else.
But that's that on LIC. Let's get an exclusive, in fact, from the insurance space. And, the government, as we understand, is progressing with a proposal to put into operation the Golden Hour program that actually plans to provide financial assistance for medical treatment of road accident cases. Now, the Road Transport Ministry has written to Chief Secretaries of States recommending a penalty on owners of those vehicles that are lacking insurance. Anurag Shah, my colleague, is here with exclusive details.
Transport Ministry has returned to Chief Secretaries of all states for stricter implementation on uninsured vehicle. As we know that 50% of vehicle running on roads are uninsured, and as per Motor Vehicle Act, any vehicle running on road should have a mandatory third-party insurance, and the trigger for directive by MORTH to state Chief Secretaries is the Golden Hour treatment scheme, which is launched on the pilot basis, but government is planning to launch this scheme on pan-India. This scheme will provide cashless treatment of 1.5 lakh rupees or 7 days of hospitalization, whichever is less, for road accident victims. But general insurance companies has agreed to contribute to this fund only for insured vehicle. So for uninsured vehicle, government will bear the cost. So now government intend to reduce the number of uninsured vehicle, because for insured vehicle the fund will be given by the insurance companies only. So going ahead, we'll see that e-challan will be issued by transport department across the state, because now government is determined to reduce the number of uninsured vehicle running on the roads. And as per Motor Vehicle Act, it's a mandatory to have a insurance, third-party insurance. So this is the directive from MORTH to all state chief secretaries.
All right, thank you so much for that, Anurag, for getting us those exclusive details, and also a crucial one when you talk about it. But let me move on. Let's talk about the events, right? Because most of these event risks seem to have surpassed when you talk about the markets, be it Trump taking over, be it also your budget, be it the Delhi elections, be it the RBI MPC meet outcome. This week, a big event that's lined up is the PM's visit to the United States. You have the oil minister's statement saying that the PM will be having a bilateral meeting with President Trump. It's going to be crucial, natural for energy security to be part of the discussion, is what the oil minister is saying. And also they're saying that they are expecting very big developments when you talk about the energy part of it. But let me get your view, Mr. Shenoy, given the fact that, yes, you have this big visit from the Prime Minister to the United States, and that I think is going to be a big event to watch out for, given the fact that there's a Trump rhetoric on tariffs. He's called time and again India a tariff king. We've tried to move somewhere on the tariff front in the budget. What's your sense? What should one expect when you talk about this big meeting? Which are the sectors one should watch out for and place themselves or strategize for this?
So to be fair, first thing, we haven't done anything meaningful on tariffs. So they've just moved away from the duty to the AIDC, which is the agriculture import cess. I don't think, therefore, that we've actually done anything meaningful. Of course, there is no reason to preempt doing anything. You meet and then they make demands, and then you say, okay, well, this sounds correct, this sounds not so correct. For instance, importing a Harley Davidson motorcycle at even after a 0% duty, that thing will still cost you like 7 or 8 lakhs. It's not going to be meaningfully bad for India. We don't, our roads don't really like those kind of vehicles as much, and they won't sell at those price points anyway. So you might as well kind of reduce those duties, but it has to be a bilateral negotiation rather than us saying, oh, let's reduce it anyway and let's figure out what they want next. So there is going to be a negotiation on tariffs. We have always had tariffs. America has always had tariffs up till maybe 20 or 25 years ago. America has been America in the 1700s and 1800s, when they were developing, had 40 to 50% tariffs. So every country, when it's developing, has to have tariffs. China doesn't have tariffs, but they don't allow you inside by non-trade barriers, non-tariff barriers. So they don't allow you to do certain things. A Twitter can't exist there. They have rules that says, well, you just can't. So you have to use a Chinese-made product. So they have other ways to deter foreign companies from investing or doing things there. So I think these things will be discussed in some meaningful format. We're really small in that thing. We should at some point stand our ground. There were some reasons for these tariffs, and we want our industry to develop. So some of these tariffs make sense. Some of them are ridiculous and they don't make sense. And some of our rules are also convoluted. So I hope we kind of use this opportunity to reduce those. But I would assume that this event is of significance only because it's happening now. To me, a lot of events have already happened. We've had a rate cut, election results. We had the budget that has come and gone. Relatively, this will be a smaller element of it all, and I don't expect it to be majorly positive. We should have expected tariffs right from the day they started talking about tariffs, and I'm sure we're going to get some of them regardless.
All right, then on that note, we'll slip into a break on this edition of Closing Trades. Markets over there on near the day's lowest point. When we come back, we'll talk more on markets and stocks. Don't go anywhere.
Exchange partner BSE, the power of vibrance.
Can someone working alone solve all the world's biggest challenges? Isn't collaboration the way we'll make lighter, more sustainable packaging and generate limitless energy? At SABIC, we believe the chemistry between people is the chemistry that matters. SABIC.
ये है स्कैमर साहब, बिजली का बिल का भूत बनकर आपको डरा रहे हैं। रिमोट ऐप डाउनलोड का झांसा और अकाउंट से पैसे गायब। ओ भाई साहब, मत कीजिए क्लिक फ्रॉड लिंक पे। जब बिजली का स्कैम मैसेज आए तो अंधेरे से SBI की रोशनी बचाए। नहीं जाएगी घर की लाइट, लेकिन पैसा जरूर होगा आउट ऑफ साइट। बी स्कैम सेफ।
अरे टेंशन किस बात की? सेंचुरी प्रोवोट का प्रीमियम प्लस है ना, लो एमिशन, हायर डेंसिटी, वाटर रेजिस्टेंट, टर्माइट एंड बोरर रेजिस्टेंट भी। यानी ये है जहां नो टेंशन वहां।
Premium Plus by Century Prowood.
बीमारी हुई तो पता लगा कि हॉस्पिटल का बिल ऑफिस के हेल्थ इंश्योरेंस से कई गुना ज्यादा है। काश मैंने हेल्थ इंश्योरेंस लिया होता।
पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 430 रुपए महीने से शुरू।
Karnataka is all set to host the Global Investors Meet 2025 and also with the theme Reimagining Growth. What is reimagining growth?
Everybody look at Bangalore and Karnataka only as an IT hub. A lot of people do not know what are the other part of the growth story. We're number one in electronics, we're number one in machine tools. In aerospace, we have around 65% of our contribution comes from Karnataka to the country. So we're number one in the startup capital of India. We are high in the innovation. Now there are newer things to come. That's why we said reimagining growth.
Watch this exclusive interview at these times only on Times Network.
सर मुझे क्रिप्टो करके लाइफ बनानी है, पर कॉन्फिडेंस नहीं है।
कॉन्फिडेंस चाहिए?
हाँ।
कॉन्फिडेंस चाहिए? Come on, you have to land it. कॉन्फिडेंस चाहिए? कैप्टन, इन्होंने सीखा है, इसलिए ये कॉन्फिडेंट है। अगर आपको क्रिप्टो में कॉन्फिडेंस चाहिए, तो क्रिप्टो सीखना होगा। CoinDCX, क्रिप्टो कोच, लर्न करो, क्रिप्टो करो।
सर आप स्माइल कर रहे हैं?
मैंने भी सीखा है।
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
अबे गुल्लू, क्या कर रहे हो?
कपाल भाती। यहाँ ऑर्डिनरी प्लाई जैसे हार्मफुल गैसेस नहीं है। खुल के सांस लो।
हाँ, यहाँ सब ग्रीन प्लाई, जीरो एमिशन प्लाई से तो बना है।
शाबाश। ग्रीन प्लाई का जीरो एमिशन प्लाई, हेल्दी इंटीरियर्स का रिप्लाई।
Dadu,
Yes?
what does premium mean?
Beta, premium you can say is like petrol. The car will keep going till the time it has petrol. Once petrol is over, the car stops.
But Dad, this time even if the petrol is over, our car won't stop.
How come?
With LIC's Jeevan Labh, even after the premium payment tenure is over, the policy's benefits continue.
That means our journey of happiness will continue non-stop.
LIC, हर पल आपके साथ।
अरे टेंशन किस बात की? सेंचुरी प्रोवोट का प्रीमियम प्लस है ना, लो एमिशन, हायर डेंसिटी, वाटर रेजिस्टेंट, टर्माइट एंड बोरर रेजिस्टेंट भी। यानी ये है जहां नो टेंशन वहां।
Premium Plus by Century Prowood.
Ajax Engineering Limited, a concrete equipment manufacturer with a comprehensive range of concrete equipment, services and solutions across the concrete application value chain, now makes an initial public offer of equity shares of face value of ₹1 each. The 100% book built offer being offered in a price band of 599 to ₹629 per equity share of face value of ₹1 each. Opens February 10th, closes February 12th, 2025. For risk factors and more details, refer to the red herring prospectus dated February 4th, 2025.
Safe investors के लिए, bold investors के लिए, Angel One for everyone. 2.5 crore Indians की तरह आप भी शुरू कीजिए.
Angel One for everyone. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Anytime is a good time for multi-asset allocation funds. Invest in equity, fixed income, gold, silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. You're watching Closing Trades. We're live from the Motilal Oswal studio, and let's talk about markets then. Given the fact that we are pretty weak in trade today, the advanced decline ratio, no despite respite coming on that particular front. You have the broader markets that are under pressure in trade today. Deepak, let me come to you and let me get your take coming on the consumption pack. Given the fact that you thought that post the budget, that's a place that you can actually go ahead and invest or look at least the consumer discretionary space. Do you think a week after the budget, that sort of a thesis holds?
Well, it's a week after the budget, like you said, and it's not even like this saving has come through right now. So, and I think what we call the consumption pack is this FMCG stuff. I mean, how many more noodles will you consume and how many more toothpaste will you buy? I think the durables is where the action will be going forward. It may not necessarily be in this stuff that we call consumption, which is typically smaller end FMCG or things like that. It's not going to be staples. It's going to be durables that I think takes a bigger part of the savings going forward. I don't think we should focus on some of the more expensive FMCG companies also, because they are just normalizing in terms of their long-term PE ratios, which should be at 30 to 35 to 40 times at best, not at the 60, 70, 80 times that they used to be. Now some of them have come down to the 50 time number. But when you have a set of companies that grow only at maybe 5 or 10%, why would you pay a 50 times earnings even for them, regardless of whether they're MNC or not MNC or so on? So I think this is a normalized correction for them. However, some of the durables players, they had also gotten valued at with maybe a 40, 45, 50 times. They're down to 30, 35 times, and maybe they have a greater potential to grow given where we are. The 1,10,000 rupees saving at the higher end in the tax budget translates to about nearly 9 or 10,000 rupees a month, which is the EMI for a small car, so or even a mid-sized car. So I think that's where the action is going to move to, not to where what we call consumption, which is consumer staples really.
Oh yeah, absolutely. Considering that they're, price inelastic in any case. But Deepak, tell me, what's the strategy so far? I mean, what sort of cash levels are you recommending to sit on across your clients?
So different strategies here, Aisha. I think if you have a momentum kind of a portfolio, which we do, it has some natural cash because the momentum is not much, and therefore cash levels go much higher simply because it responds to the market. And therefore your cash levels will be high. In other cases, in our fundamental portfolios, we have very little cash, though we have generated some cash to move around. There were positions earlier that were more cash oriented, maybe a month or two ago, and then now that has come back in, so we're able to kind of pick up more stocks. We've been waiting for results to finish, and now they're nearly done, so we're able to kind of reshuffle the portfolios a little bit. So I don't think cash level should be too high at this point. You can actually go back in meaningfully over for a 4 or 5 year horizon from here. But I think the focus has shifted from some of the more expensive small or mid caps to a slightly larger proportion of large caps, slightly different makeup of mid and small caps. But overall, our investment themes in a stronger India going forward, they continue to remain in that. I'm not really changing core investment thesis here. I'm just moving stocks to based on results to what may make more sense for us. I still think a lot of focus, a lot of good things will happen in the defense, in manufacturing, even in the consumer durables sector where we have a few investments, and in financialization where I think growth continues unabated.
But is private banks the way to play it?
Private banks are one area. I think they're more, they're cheaper than perhaps some of the other parts of the market. But the larger private sector banks, some of them actually provide some potential to grow. And even some of the NBFCs now, I think there's some more potential going forward. Because basically, the stronger NBFCs will probably win given that there's a lot of pressure on smaller ones in terms of NPAs, asset quality, and growth. So, kind of using this as a moment to kind of reshuffle that part of the portfolio. But financialization goes into other areas as well: market players, market infrastructure participants, people who do the backbone of things like mutual funds or the stockbroking industry. I think those will also continue to do well going forward. So it's not just the banks that we'll focus on.
Makes sense. Deepak, great to have you on the show. Thanks as always for your time and insights.
Thanks, Aisha.
If you like this video, then like, share and subscribe to ET Now.